Hey, mic check. What's up, Aaluxx, Kenton?
Hey, yeah, I can hear you.
Cool. Aaluxx, you there?
Okay, mic check, one, two, three.
I can hear you.
Excellent.
Sweet. Cool. I think we can just get right into it then. Aaluxx, you want to get started on just the update on TCY, kind of where things are since the last space that we did? We can do just a quick recap on what TCY is and what kind of mechanisms will be in play, and just like some kind of timeline going forward for TCY release.
Yeah, for sure. Hey all. So TCY, we will be minting 210 million TCY and paying one-to-one to debt holders according to um, the snapshot of their claims during, from the block of the pos of THORFi. This is, in the case of savers, just their position. And in the case of lenders, their collateral minus the debt they took on plus repayments they've made. Um, so this TCY is getting 10% of swap fees um, to pay it out. They're paid out every 1 day, so every 14,400 blocks. And there will be a pool for it as well, TCY with Rune. So people can buy and sell TCY at their discretion. And yeah, we've been working on it for a few weeks now since validators voted on it, Proposal 6, and the first part of the implementation plan as well, with the emissions being stopped. So yeah, we're still cranking out code hard on that. More or less, the expectation now is this week we will mostly be done, uh, and then the next one we will be wrapping up some last details. Then the week after that is wrapping up reviews with 9 realms and all the THORChain team to make sure it's all tight. And then the week after that, stage testing so that it goes into version 3.4 over to mainnet. So it's definitely now the next priority for everyone involved, and looking to target the next version for it. This timeline is, of course, uh, an estimate now. Something can happen that makes it longer for some reason, but we believe it's an achievable timeline now with the team and where things are right now. Another important thing to mention is that we're also adding an opt-out mechanism for getting paid the payouts. So if there's someone that is looking to be exposed to TCY, but for some reason, for some regulatory reason, they cannot get paid every day, they can also go ahead and buy the token and just opt out of the payouts. That's possible now. Payouts that are rescinded from are just used to buy up more TCY to keep increasing the claiming modules TCY. So yeah, that's pretty much the update on it.
Why would somebody want to do that?
If it has been brought up to our attention for some funds that want to get involved in buying TCY, that they cannot necessarily cope with the payouts in the regulatory framework they choose to subscribe to.
Oh, interesting.
So you automatically receive payouts in TCY, or does TCY need to be staked, or is just an opt-out mechanism for not receiving yield
Yeah, so
for TCY?
it's more like an opt-out mechanism. So people that claim automatically start getting payouts, and then they don't have to pay gas or anything. Then it is an active choice to opt out.
Awesome. So we should be looking for this in the next version, 3.4. 3.3 is going out very soon. That should be released tomorrow, and then the next release, 3.4, will have TCY in it. And then and only after that point will anyone be able to claim their TCY. It's pretty likely that we're going to be hosting it just on like a subdomain of THORChain.org, like something like tcy.thorchain.org. So if anyone's saying to claim it somewhere else, then it's going to be at like a very obvious spot, and it'll be widely publicized. So just if you're waiting for it to claim TCY, you're gonna have to wait till version 3.4 in the next couple of weeks, and then there would be a domain spun up that will make it very easy to claim.
And any wallet that supports Rune will be able to claim TCY, right?
Correct. So there will be more instructions forthcoming, but yeah, people will need the L1 address that they used to make a savers or lending position, and then from that they'll need to send a transaction, and then the TCY will be associated with their new THORChain address. But we'll step through all of that in the UI to make sure that it's really clear for folks, as well as providing some supporting material.
Right on.
Yeah, it wouldn't be a THORChain address because people like opened up a loan with their Bitcoin wallet, right? Like, which could be like a ledger or like any device that you opened up. The actual device doesn't matter, but I'm just saying like we don't actually have the Rune addresses of everybody, which is why you're going to need to come in and claim. So it'll be like a wallet connect for basically any of the wallet options that were available on like THORSwap or wherever people actually took out their loans from, just to make it as easy as possible. Because it'll actually be your L1 address you need to connect, not your THOR address. You'll need to provide your THOR address, but you'll actually need to connect and sign a transaction from the original wallet that you either made a savers deposit or loan from.
Yeah, sorry I'm late, everybody. Oh yeah, just sorry I'm late, everybody. I was having a productive conversation with Multi, and it ran over a bit. But yeah, how's everybody doing?
I'm doing all right. How are you?
Oh yeah, doing good. Yeah, it's been a busy day already. Just a lot of things kind of wrapping up. So yeah, so Aaluxx, I was hearing you kind of talk through the TCY updates. I just also wanted to share that 3.3 is going to go live tomorrow. We're about between 10 and 8 hours away from that going live. So excited to get that out, and then soldiering on to 3.4. Primarily pushing for getting TCY out then, and then there'll be some StageNet testing, the companion UI that Cow was talking about, and then we're in a good spot in my mind for where the kind of THORFi recovery and resolution and everything like that can kind of come to fruition here.
Right on.
Cool. Orion, you want to go through some of the things that are in 3.3? Because since that's rolling out tomorrow, you probably get to just do a quick recap on just what the current dev priorities are, what's coming out in the next version, what's slated for 3.4, which is the next version, and then other things that are being considered on the roadmap. I'll kind of even you out once you go through a couple of things here.
Yeah, sure. So there's a number of fixes in 3.3. So there were a few things that were discovered in StageNet testing that needed to get addressed. A couple patches for like Querier, some observation related stuff. There was some cleanup in the simulation framework, and then also kind of the big thing is some foundational pieces for app layer and CosmWasm. So yeah, it wasn't like a super sexy feature release, but a lot of foundational stuff that's necessary for kind of the next what's in the queue. And then kind of on the upcoming front, like I was saying, 3.4 for the subsequent release after this one will include TCY stuff, XRP, and a few other pieces. I'm sure there will be some fixes in there as well as we move along. And then the current state of play is that 3.5 will primarily be app layer stuff, and we're gonna hit 3.5 hard with kind of the launch of the core app layer contracts, and hopefully that can all go super smooth after the TCY stuff has shipped and users are comfortable there. Trying to think through anything else I missed, but yeah, holler at me if I missed something important. One thing I did want to address is over the past few weeks, there's been a lot of relevant conversation around how does the app layer fit with the base layer, and what's the security boundary and all of those sorts of things. I just wanted to say that the app layer team's been working really hard to improve kind of communication on that front, and they've prepped some great documentation that will get socialized here shortly to make sure that nodes, Thor chads, and then everybody's on the same page in terms of how the app layer benefits THORChain and what the where the kind of security boundaries are, and then what the potential risks are as well. So yeah, looking forward to that, and just grateful for that team for putting that all together so that everybody can get on the same page here, and we're all speaking the same language rather than having a lot of kind of competing misguided notions around how things fit together.
Awesome, thanks. I just wanted to jump in with some other cool stuff. So DKLS 23 is ready. DKLS 23 is the world's fastest MPC library. We commissioned with Silence Laboratories to kick off an open source library that's been integrated in Voltisig. It is destined, and always was destined, for THORChain and Maya protocol. Now that we're pretty happy with the performance, if you don't believe me, just jump on Voltisig. The latest update has DKLS by default. It is 3-round ECDSA. And for those of you who don't know, ECDSA is extremely difficult to get right on a threshold signatures perspective. The GG20 library, which was actually the GG18 library for the last 6 years, took a 7/9 round protocol. So DKLS 23 being 3-round now brings it on par with EDDSA. Essentially, it's as fast as you're ever going to get, to be honest. And that's coming. We're potentially a little bit nervous, but rolling it out onto THORChain initially. If you check out, I think, Auto Stakes dashboard, you can see that key signing on THORChain right now with its 20 member vaults takes 20 seconds and 2 minutes to generate a new vault. We anticipate that when we roll out DKLS onto THORChain, it's going to be down to 5-second key signing and maxed like 10-second key gen. So no more churn issues, no more key gen issues, no more key sign issues. And potentially we can scale our vault membership rather than 20 member vaults up to about 40. Potentially, theoretically, we can go as high as a giant single member vault where all 120 nodes are in the same giant vault together. There are reasons why we may not do this, because you can basically get better throughput if you have more parallel vaults at once. Anyway, regardless, we're not going to throw it out on the THORChain initially. That's probably going to be too much of a big lift. It's going to hit Maya protocol first. So we are scheduled, and I've chatted with the Mighty Heimdall to schedule in a Maya protocol upgrade to DKLS in the next month. Ideally, if that all goes well, Maya protocol should be running DKLS in the next month. So we get to see exactly how fast his key signing, key genning works, and then backport it to THORChain. So super excited to finally get an MPC upgrade tabled in. This another thing on the horizon is Bitcoin Taproot has been upgraded since forever. Taproot scripting allows you to stick basically almost unlimited memo sizes in. That's how people are minting these giant NFTs on the Bitcoin mainnet. We've always used op return, which is limited to 80 bytes. And as a result, we've had to do some crazy memo stuffing to do things like shorthand asset notation, shorthand aggregators, shorthand everything, even stuffing price limits into weird, like dropping zeros and crazy stuff like that. That's all in the history books now, because kicked off the work required to get taproot observations onto THORChain, which would mean almost unlimited, practically unlimited memo sizes on Bitcoin. And Bitcoin Cash, Litecoin, and Dogecoin allow multiple op returns, so they're practically unlimited. But Bitcoin has always had the annoying memo limit. What it means is we can basically allow. Well, the biggest thing for Ruji is you'll be able to call a complex contract, a function call via L1. So this is the X memo invocation. You can literally just write X colon contract colon function call colon parameters, and it will call into the Ruji app layer directly from your L1. So if you wanted to deposit 10 Bitcoin and open up 100x Bitcoin long, tempting, I know, you can basically will be able to do this with Bitcoin Taproot and a Ruji app layer and the perps going live. Or if you wanted to sell Bitcoin on a limit order into your Ethereum address from your ledger, also possible. So that's coming as well. Kicked off the work in the next month of this. And yeah, so that's some scraps I wanted to tell you on. And yeah, any other questions regarding this, just hit me up.
Sweet. Thanks for the update, JP. If people have questions too, just request and we'll get you up as soon as possible. I see there's a couple people that have requested already, so I'll start letting a couple people up if there's questions about anything.
One thing that people don't know is the next Bifrost upgrade for XRP is using vote extensions. Vote extensions is going to help get us to 200 plus nodes. For those who don't know, if you deposit into the THORChain vault, 100 plus nodes have to independently witness that and observe that through a transaction. But a transaction, if you bounce through the round robin Tendermint consensus algorithm, a transaction requires validation and confirmation itself. Whereas by using vote extensions, the observation of that data is actually pushed through the block itself as part of you voting on that block. So it massively reduces the bandwidth and overhead required to commit blocks. And it's one of our efforts to improve the efficiency of the network and get us on the way to 200 plus nodes.
I just want to echo Cal. If anybody's listening and it doesn't understand TCY, what's going on there, or has savers and lending, and you're kind of new to everything that happened, feel free to come up and ask questions about it too. We don't expect you to. A lot has happened in the last 2 months. So if you're behind or just catching up, feel free to come up and ask questions.
Yeah, there's 2 questions in the comments here we can answer really quick. So Orion mentioned multi. It's not multi-coin, like as in multi-coin capital. It's multipartite, who's an independent dev for THORChain. So that's what he means by multi when he says that. Another question, could someone explain the difference between Rune and TCY from an investor point of view? If you want to earn, which coin should I buy? Thank you. So, I think you should make your own determination on what it is that you want to buy. Rune is obviously like the utility token of the network, which is needed to provide security and liquidity to the network. So it's obviously very important in that way, and yields are going to be much greater, just in terms of like if you're bonding to a node or if you're providing liquidity, there's more yield coming your way. But with TCY, it's just more of a it's just a flat 10% of system income gets diverted to TCY holders. So basically, by holding TCY, you see Rune showing up in your wallet every single day, just depending on how much you own. So they're totally different assets, although they both tap into the cash flows of THORChain. But you should definitely just make your own decision on on what it is that you want to do with TCY. I think everyone's kind of got their own strategy here, and no one's going to point you in one direction or another as an investor, but you should just be aware what the differences the assets are, what the utility is. Just earning a flat portion of a 10% of the system income, or providing security and liquidity for the network?
I can add to that a bit. I think what's going to happen is we're going to see TCY, its effective yield, end up being slightly below the yield on the THORChain nodes, because TCY will be more liquid, easier to buy and sell, than having Rune staked in a node. So in theory, the effective yield on TCY should be consistently lower than the yield on THORChain nodes. And so that might, we'll see how it trades, but that could be a good indicator for people to use to kind of evaluate TCY if it's expensive or cheap type thing. So if the effective yield on TCY ends up being consistently higher than the yield on nodes, that could be a good indicator to buy it. And so it'll be interesting to see too if bond providers switch back and forth between them.
Yeah, I think the biggest difference is liquidity, because it's kind of very different between the two. If you're bonded into a node, you obviously have to your position is stuck there until you churn out. So there's obviously like liquidity issues and the fact that you need to be churned out in order to just receive your rewards and get your principal back. But with TCY, there's only one pool for TCY, so it's a lot less liquid of an asset overall. So while Rune's a very liquid asset, you're locked up bonding, and you need like much higher quantities to bond. Where at TCY, it's a less liquid asset overall, because there's only one fairly shallow pool for it, or there will be one fairly shallow pool for it. But you don't have to wait to get churned out or something in order to actually access your rewards or just your asset.
Yes, a trade-off of two different forms of liquidity. Yeah, you're right.
CryptoXC posted a few ideas on TCY. I'll just pin that to the top of the space here so people can read it.
How do you do that?
You just got it or you don't, man. That's all I gotta tell you. I got it. I think you might need to be a host in order to pin things up on the top of the space.
Okay. I'm looking at it too.
Yeah, I mean, anyone have like thoughts or perspectives on TCY that they want to come up and share, or questions that they have about it to understand what it is? We can go back into that. Yeah, just let's see what the community is up to. Any community thoughts? Anyone want to come up? No, it's crickets.
While waiting. Well, yeah. Hey, Tom. One thing I've been kind of promoting as the idea is that once you understand what the risk-free cash rate is, and you can formulate a good thesis around price of earnings, then you should be able to trade TCY quite easily on basically the forward cash flows. So you look at the rolling revenues, you look at the current market cap, you come up with a sensible PE, and if it's below that, buy. If it's above that, sell. It's literally all that is to it. Interesting that Mayer's revenue token, as I asked Aaluxx today, is trading at 70x PE, which is quite high. Whereas, I think Rune right now trades at 10x PE. So it's going to be somewhere between those two. 10x is on the low, 70x is on the high. Pick something in the middle. I mean, historically, tech stocks trade at 20x. Ghost Town L1s trade at like 200x PE. So I'm not saying that, but it's going to be a cash flow token, and so I think you can quite easily trade it on that basis. What do you think, Kenton?
Yeah, high growth stocks will often trade at 50 to 100 PE. And I definitely consider THORChain a high growth company, business, what have you. And that is actually, if you look at the last 2 years, the yield on the nodes to the Rune market cap, it was trading between like a 50 to 100 PE, pretty like fairly consistently. So I see no reason why we can't go back to that. We just have to rebuild after the last couple months. So yeah, and in my mind, TCY could be slightly a bit higher. So yeah, that's not
And
crazy.
on Maya's case, it is natural that P is higher because it's just smaller. So it's when the denominator is this low, it's kind of easier for a speculator to think there will be dramatic growth. So that's kind of why we get typically, high double digit to even low triple digit sometimes, P&E ratios. But definitely on THORChain side, if you look at revenues, they've been consistently growing at an average of 60% per year, which is quite dramatic. So this goes for the last 4 years, and I'm talking about fee revenue, not volume or any other skewed metric. So like actual money in the bank fee revenue is been growing average 63%, something like that, when we ran the numbers. And actually the trend continues through Q1, sorry, of this year. So even despite the turmoil and when, counting just January and February, we were tracking for still that 60% growth. So definitely in the growth region. And TCY will be comparatively liquid to the Maya token. So that's also points going for it.
Yeah, the plan is, and the non-realms will help you launching this, but the plan is to launch it at 10 cents TCY. And I mean, 10 cents TCY is well below what I think it should be trading at. If you just run the numbers today, it should be trading at like 50 cents. So,
Yeah, I'll be shocked at that
and
10 cents. I think it's going to go straight up right out of the gate.
Yeah. Yeah, but it's
yeah,
it's part of the reason for that, and why that made it to the proposal, just so people understand, is that we want the TCY rune pool to actually absorb rune. So if we launch the pool high and then there's a net sell pressure, you have the opposite effect where rune is exiting the pool and going back into the system, whereas launching low, it's absorbing rune from the system into the pool. That's number one. Number two, we also just want to stimulate liquidity, right? If people can start buying and selling and it's at an attractive price where it's clearly undervalued, it creates this interest in having the bids start coming. And finally, we just want to see that hockey stick behavior. It's much more desirable than the other way around. So the price is not really a reference price or the price that we expect TCY to remain in. That launching price is intentionally low.
yeah. And Alex, just explain that unclaimed TCY. So yeah, there's roughly notionally 200 million TCY in claims, but we expect 20% to not claim, typical of most claiming amounts. So there's going to be, and just explain the burn mechanism for the unclaimed TCY.
Yeah, so there's some TCY that's in the claiming module that will never be claimed, or some that might be claimed and then donated back. And what that TCY still has a rune allocation. Now that rune gets paid to the claiming module, and what we are coding it to do all the time with that rune is just buy back more TCY. So essentially, the claiming module will constantly be bidding the price, buying at any price. It's thoroughly price agnostic. Just whatever money it has, it will buy TCY. A endless bid on the pool to keep accumulating more TCY. And that accumulated TCY gets paid rune as well the next day. And that rune is also used to buy more TCY from the pool and so on. And what we hope and expect is that over the course of the next 4 to 5 years, the claiming module ends up accumulating like 30 to 50% of the TCY supply this way, and that it continues to keep beating that up all the time. So yeah, over time, just the claiming module will keep accumulating more and more of the supply, and it will forever just keep buying. Now, this is much better than buyback burn, if you can notice, because buyback burn would mean, I have this much rune, I go, I buy TCY, and I burn it, and that's done. But it's not increasing and kind of accumulating in an exponential fashion. So this way, you're actually increasing the rate at which it's burning, in a sense, over time. So yeah, and this goes for also when somebody opts out from getting the yield, that's also used to buy more TCY. And there's the swap fees from the TCY room pool is also used to buy more TCY. And it's all going to the claiming module to keep bidding more and more every day.
So do you think there's any concern for longer term? Like TCY looks like it's very attractive. Like, do you think it could cannibalize money? It'll attract money. It'll take money away from Rune and more go towards TCY. Like maybe TCY ends up trading at effectively 1 or 2% yield, and it's just like it's super expensive because it's just that much more attractive than Rune. And maybe TCY becomes half the market cap of Rune or something like that. Do you see scenarios like that unfolding?
That can happen, and it's not really wrong. Today, the Maya token is half the market cap of Cacao, and it's not really toxic flow. So what would happen if TCY is very attractive is not that Rune is less attractive. It's as attractive, arguably more than 2 months ago, because now it has this kind of immovable liquidity, just doing work for validators and stakeholders in the network. So Rune is just as attractive as ever. Now, if TCY is also very attractive, that's just great. That means there's more liquidity buying Rune to then buy TCY. The pool, the price of TCY going up means the pool actually is accumulating Rune. In the pool, that means it's being gobbled up away from the system. So decreasing the supply in the rest of the system. It means people that really had a very painful and hard time these last few weeks, have a well-deserved reward. And over time, the supply is being gobbled up by the claiming module every day. And 5-10 years from now, we can decide to burn that claiming module allocation to give back some of the protocol revenues to the nodes. Again, this is just what the claiming module bought, fair and square. So I don't see why that really would be a problem. Like, I think if we can make a mistake here to err in favor of people that were affected by everything that happened, I think that's a good trade-off to make. Like, if we're gonna err, let's do it to the upside.
Yeah, I mean,
Yeah,
certainly once. Sorry, the thought I had in my head was once TCY is trading well in excess of dollars, and the TCY module itself has got a significant chunk of that supply. Given that Thor nodes themselves are the biggest, essentially the stewards of the protocol, you could definitely see a case in the future where an ADR could be passed to return that yield back to Thor nodes itself because they've paid their dues in a way. But anyway, that's years down the future, and we'll need to see TCY in the multi-dollars for sure.
Okay, kind of the point I was trying to make is like TCY is a very attractive token relative to even Rune, and like the debtors, people have been complaining that debt has a higher claim to than equity, and the equity should get rubbed out to make debtors whole and stuff like that. Well, and we kind of are in a sense. Like with TCY, you get that direct claim to the revenue, whereas the Rune token doesn't. The Rune token you have to put into the network. You have to do more work to get that yield. So TCY, it will be like a preferred share. It will be like a premium token for THORChain. So the debtors are kind of still coming out ahead in front in a sense. And yeah, like you said, Aaluxx, like if Maya, the market cap of Maya is equal or half of Cacao, and then that happens again with TCY and Rune, it's the same thing. That means TCY is trading at a premium. So it's good for debtors. They get paid back that much sooner, and even make it's entirely possible they make more money, which I think a lot of people keep missing out on. This could actually, in theory, be good for them. They could end up, for someone who's patient and doesn't need their money right away, in a few years, they could end up with more than what they theoretically lost. So yeah,
Yeah, well,
it's a great solution.
even more on this in this market, like TCY only needs to get to 77 cents to make Bitcoin servers whole, because of how Bitcoin's moved since the cutoff. So like, yeah, there is a possible future where we really make whole people much faster than initially thought. And with things coming up like the app layer, new chains, and ideas we have for capital efficiency, it's definitely in the cards. Like it will still require excellent execution. We can definitely not afford mistakes now, but it is possible, and it's definitely desirable. It's at least why I'm involved and why I'm kind of working on this. It's 2:30 a.m. for me now, but I'm just yeah, set
And
on the
you
mission of hoping to make everything happen and have people made whole as fast as possible.
you mentioned Bitcoin was 77 cents to get even on TCY, but Ethereum would be even less. I'm guessing
Yeah, like
60
55
cents.
cents. Yeah, like
There you go.
55
Yeah.
cents.
Yeah.
And this is like, also remember, what if the TCY price is 55 cents, but you've been paid for a year Rune, you have more than 55 cents also.
Yep.
So
Yeah.
this is all taken into
So
account.
is
But
it more
again,
contingent on the price? It's more contingent on what the TCY price will, when it goes to that 55 cents that debtors are made whole. I mean, I presume that a
correct.
lot of people will probably exit at that point out of the.
Everyone will exit at whatever price they will exit at. That part of Prop 6 is like, we give max choice and max agency to the users to choose and time their exit according to, what they're getting in payouts and what the price currently is, and what opportunity costs they have on other assets they want to be exposed to. But yeah, definitely the biggest value for the people being made whole is the price of TCY, not the actual payouts. Obviously, the payouts should increase as TCY would be directly proportional to the payout size. But the main driver of having you guys be made whole in the short term is, what is TCY trading at? And that's why we're making the token very attractive. We want it to be trading high. And again, we might overshoot and make it super attractive, but that's a good future in my book, because it's 10% of the swap fees. The protocol can survive without those 10%. And if with that, we're able to make everyone whole super fast, that's music to my ears.
Okay, well but it's dollarized, right? Because I mean, if let's say
It
Bitcoin and ETH goes up, you're
it's not
chasing.
it's not dollarized. Like the 210 million TCY tokens being issued 1-to-1 for the reference price of the cutoff date that was chosen. It's just a
Right.
reference.
Well,
You're
what
getting
I'm
one TC.
well, I guess what I'm implying is, for just sake of easy example, I pledged 1 Bitcoin and borrowed half or whatever. That 1 Bitcoin is now worth X amount. The TCY token has to be able to outrun that, correct? In order to be made whole, because I
You're
guess that's just
correct.
how I'm
You're right. You're
looking
right.
at it, right?
You might need $1.22 on TCY for in your particular case to get your equivalent Bitcoin back. But it's just math, right? You'll have to do that math on your end because everyone's gonna be a bit different.
Because everybody got in it. Everybody
Yeah.
pledged at different
Yeah.
times. I get that. So
Yeah.
that's why I was confused when he said 55% or 55 cents, because I'm like, well, that's not entirely
Because
true for everybody.
Ethereum went down, right? Ethereum is down since we dollarized
Correct.
the amount, right?
Correct. So I'm
Yeah.
just trying to think, like, in theory, is it better that that Bitcoin and ETH stay down?
Well,
Yeah, I don't know. That's the hard.
Well, it comes
And
back.
then
It
my
comes
other
back to the
question,
Bitcoin ratio, right? It's the same thing all over again. If as long as Bitcoin and Ethereum are down relative to Rune and TCY, yeah, that's better for you. It's better for all of us.
sure,
Uh,
sure, okay,
Yeah.
if
that
your
makes sense.
if your intention is to just buy back the Bitcoin you had, of course, any user is free to just say, "Look, I just want this amount of dollars back," or I just, I'm happy on TCY. I want to stay here for the long run. I've heard those stories too. It's up to everyone. But if your choice is to kind of try and get the BTC units back, yeah, then yes, you should just keep accumulating your payouts every day. Swap those payouts to BTC in this case, and then whenever the TCY is the complementary amount to get your, for instance, one BTC back, then you do it.
Okay. And then my last question, and I'll just hang up, was about the Ruji network and that kind of stuff. Like, how does that play into? I've seen, because the last spaces you had, you were talking about JP's not here. I asked a few questions. Well, okay, and you guys kind of went in and explained what happened. And then I think I've seen him online posting about Ruji and about some other project or coin. How does that play into any of what
Ruji is
TCY
gonna.
like?
So
It's what?
Ruji is the app layer for THORChain. So we could have rolled out a permissionless app layer, and that has not been shown to work. Malicious devs will exploit a whole bunch of P zeros to try and hold the chain. That's been seen time and time again. So we're going to roll out a semi-permissioned app layer where app layer devs have to be intimate with the network and on the side. The app layer is designed, it's essentially you can roll out any DeFi app you want. You can roll out lending protocols, you can roll out stablecoins, anything. But rather than just have a chaotic, uncoordinated app layer, we decided to have a coordinated, orderly app layer. And part of that, kind of like knighting of this app layer was that they would share 50% of their fees down to the base layer. Now, apps don't have to share their fees. So, like, Uniswap does not share fees with Uniswap validators. Compound does not share fees with either Compound stakers or Compound the Ethereum validators. The difference with Ruji is they will share fees with the base layer, and they'll also use base layer liquidity. So the app layer is just a orderly rollout of a DeFi app ecosystem designed to bring more revenues to the base layer. And so you look at Ruji as just a well-branded, well-organized, well-funded app layer designed to increase base layer revenues.
Which the base layer is what?
That's
Rune.
Thor?
that's THORChain. Like,
That's THORChain itself.
Yeah.
Okay, so anything that's dealing with root, I guess that was my question, is like, how is Ruji? Why are they going off on another project unless it's going to bring more value to people that are already in the hole?
Yeah.
Yeah.
So if
Why spend time there? I guess was my question.
Ruggiera performs well, it just generating more economic activity on top of THORChain itself. And that
Okay.
economic activity will always keep settling on the base layer, generating volume for the base layer and thus fees for TCY holders. So this is actually one of the main drivers of possible future growth of swap fees that's directly proportional to TCY price.
So why couldn't we incentivize more TCY holders with maybe like, because Ruji's its own token, right? It's
So,
not. Could
so
you just airdrop to people and at least
no.
that
So
it seems like
Ruji is the acquisition of Kujira. Kujira was an entire Cosmos app chain that blew up in July last year. So we acquired them, and we are migrating an entire. At one stage, it was worth $500 million FTV. So they had their own deleveraging spiral in July last year. We underwrote some outstanding debt on that chain. part of the deal is they are going to shut down their entire chain, migrate their 100,000 users and 30 app developers and a $10 million treasury plus now over to THORChain to seed an entire DeFi app ecosystem. Without Kuji, which is by the way, Ruji is Kuji plus Lavana Perps, which is a team of 5 engineers with four successful perps deployments on Osmosis, Neutron, Injective, and more, and migrate this tech to THORChain. So it's an acquisition of an entire ecosystem of over 100,000 users, over 40 developers and their apps onto THORChain. If we didn't have this, we would be launching to Crickets, our app layer. We would be out trying to hunt down developers, hunt down users, hunt down ecosystems. And if we didn't even do that, we'd be launching Cosmwasm to a bunch of rogue developers who would have their own interests at heart. And the most they would be sharing with the base layer would be transaction fees, gas fees. That's not the case. So Ruji will be sharing 50% of all app fees with the base layer as part of this deal.
So the TCY holders are already getting a benefit. That's what he means to say.
Got it. Okay. Yeah, that was kind of my question. Yeah.
Can I put those 100,000 users into context? THORChain base layer at best has like up to 50,000 users a month. You know, we've never gotten above 60,000. So if we all of a sudden get 100,000 new users on top of that, it's going to move the needle.
Yeah, I want to qualify. That was 100,000 lifetime Kujira users. But they are there. They do have QG wallets. They were users of their apps. So it's just a matter of us reactivating and moving them over. Very bullish on that. But I do want to reiterate, if the Ruji app layer revenue is shared with the base layer, that base layer revenue is shared with TCY.
Okay, perfect. That helps a lot because I hadn't seen anything that connected the two on X or anywhere, so I was a little confused. To me, just from an investor standpoint, I'm like, what's this other project? How is it benefiting? It to me, it just sounded like somebody just ran and started something else and just.
You could say it's a consortium. If someone bought Compound, Aave, Uniswap, PancakeSwap, Tornado Cash, and instead of having like 6 different tokens, they just had one token. And better than that, that one token, that one consortium shared all their revenue with Ethereum base layer. That doesn't exist. That's like a fanciful idea that would never exist. But we've been able to try and pull that off. And more than that, we hope that the Ruji Alliance will continue to grow. And any app in the Ruji Alliance will share revenues with base layer. If you deploy a standalone DeFi app on the THORChain app layer outside of Ruji, there's no requirement to share it with the base layer unless that app developer unless node operators demand that this kind of like node tax in a way. It's a node tax, right? And we will see this happen in 3, 6, 12 months. There will be teams come up to Thor nodes and go, hey, I want to launch an app. Here's my proposal. Thor nodes like Kenton here and whatnot need to immediately demand a node tax immediately. And literally threaten to shut that app down unless there's a node. I want to see nodes demand a node tax because that's how we stay sustainable long term.
And the node tax, it's not just going straight to nodes. It goes to all of THORChain. So like if Rujira has $1 of fees that they generate, they keep 50 cents for them and their token holders, and 50 cents goes to THORChain. And that is then split between the pools and the nodes. But before that split, 10% of that will go to TCY. So 5 cents will go to the TCY holders, and then the 45 cents will get split between the nodes and the pools.
And when does that launch? Or when is that complete?
That will happen in the next month. See, you can think of the Ruji Alliance as artificially keeping node tax at high levels at 50%. If Regi didn't exist, there would be no precedence for this node tax, if in a way. And like all these apps be launching with 0% node tax, they wouldn't even think about the THORChain base layer. And so by setting this artificially high node tax precedence on day zero, every single other app to follow, permissionless or whatever, will have to match this precedence. And that's why we're doing it.
Can I quickly ask a question? There was once an Excel sheet of the Ethereum and Bitcoin deposits. Can you tell me where that is? I can't find it anymore.
I can. Yeah, I can help you find that. I'll add a link to the Twitter Space thread.
It's just write this down.
Okay.
It's THORnode. So it's ninerealms.com/THORnode/THORChain/pools/Bitcoin/savers or borrowers.
Right.
It's in
Okay,
the
thank you.
it's in just the Nine Realms THORnode API docs.
Nine Realms. Okay. Another question I have is I'm trying to imagine like what has to happen for TCY to say go above 1 when it only represents 10% of the fees. Or am I missing something?
I can maybe try to help you understand. So do you understand what a discounted cash flow analysis is?
Yeah.
Okay,
Yes.
so that's what the market is constantly doing on all assets, right? Doing their own discounted cash flow analysis. And they're going to look, the market's going to look into THORChain's future and say, what is the future revenue of THORChain going to be? And, everyone's going to have their own estimates. In my opinion, 30 million is just 3 million a year is just a start. It should be 300 million a year, and then eventually 3 billion a year, right? I'm bullish on THORChain's growth. So I'm gonna use higher assumptions in my analysis, and when I discount those cash flows, take 10% of them, and then that's my allocation to TCY, and that's how I get a valuation for TCY. So some people could maybe justify paying $2 right now for TCY, if they're really aggressive on their future expectations of THORChain's growth. TCY could trade at $10 someday. Like that's entirely plausible. That's all going to depend on THORChain's growth, and as long as it keeps growing, it's kind of one of those things. Like if the growth is going really well and is up year after year after year, people will get more aggressive with their assumptions, and that'll relate into higher prices for TCY and Rune. If revenue is going down year after year, then they get aggressive on the downside, right? And they have more conservative assumptions, and things are valued lower. So the $1 TCY is really, it's just that snapshot of the debt on that day of the default. And like I think it was Maverick mentioned earlier, like so in theory, TCY could trade at $2 one day, but you're still down in Bitcoin terms, right? There's the moving math there. But TCY would be at $2 honestly because THORChain is doing well. It's growing. It just hasn't outpaced the price of Bitcoin yet.
So the TCY, the people are going to receive is the amount that's in that Excel sheet. Is that correct?
I don't know how to answer your question. Basically, whatever Ethereum, Bitcoin, and crypto people were owed on, I think, January 24th, we're just taking the dollar prices of the crypto on those days, multiplying it by those tokens to get to dollarize it, to get a dollar amount, what people are owed on that day, which works out to I think it's like $206 million. So everyone's going to get one token for each $1 of debt.
Exactly. Okay, that was my question. So it's 1-to-1, but they're being discounted at 10 cents. All right. Okay, makes sense.
Yeah.
All right. Thank you, sir.
Specifically, where this 10 cents is coming from is the Treasury would seed the pool with $4 to $5 million. Well, there's 210 TCY being minted. There's only 206 million owed. So there's 4 million that will be put into this pool to match with an amount of liquidity. And that will then set the starting price. And it's been
Right.
Alex's suggestion is to start it with a lower price so that it immediately absorbs rather than creates sell pressure. Now, in terms of like how do you value TCY in the day to day, my suggestion is you take 30 days of rolling revenues, times it by 12 to get the annualized revenues, then apply a sensible growth factor to that. Tech stocks, as Kenton was saying, trade at 20x. And if you then take 20x times by the annualized revenues, divide by 10 or 10% of that, which is dedicated to TCY, you can come up with a sensible annualized 20xp valuation for TCY. And then if you're like Kent was saying, if you were bullish on growth, then apply a 40xp. If you're bearish on growth, then reduce it down to 10xp. But then you could very simply plug in these numbers. You know, I could do it in my head right now, and you could come up with a TCY valuation on the day. And if it's overvalued, sell it. If it's undervalued, buy it. It would be.
Right.
It's actually even easier to value than Rune, because Rune you can only access cash flows if you run a node, but running a node requires operational expenses, staffing expenses,
Right.
etc., and increased risk, slashing risk, and protocol risk, blah, blah, blah. Because TCY does not have those that hangover. So it's easier to value.
And another way to think about it too is if you look at December and last year in general, like THORChain was trading like a 2 billion and above market cap. And so if you just want to do some crude maths, that was Rune with 100% of its revenue valuation at 2 billion. Well, if Rune is only going to get 90% of its revenue, and it trades at 1.8 billion market cap, and the other 10% is going to TCY, TCY could have a 200 million market cap. So there you go. So there's another way for TCY to trade at $1 at some point. Just Rune going back, or THORChain is, the ecosystem going back to its market cap in December. It's a bit more crude, but it's just another simple way to look at it.
Okay. Thank you.
If I can just go off of what you were saying, JP, around cash flows and sort of Rune prices. I know you've also been speaking a bit on X about the optimistic security model that you're thinking is the path forward for when the app layer launches. I just want to get your thoughts on that a little bit more detail. I guess from my perspective, the optimistic security puts the protocol at a bit more risk and also reduces the value accrual to Rune. I guess on one side, if you have optimistic security, you could just say more of the Rune flows through. The revenue is still there, but I think if there's optimistic security there, we increase security and we also have more value accrual to Rune. So I think that's a better way to go.
Yeah, arguably the protocol is already operating under an optimistic security regime because there's no limit to how many trade assets you can mint. The regime is predicated on there being no limit to TVLs, which means as much as you want to mint in trade assets, secured assets, at as much liquidity as you want, just go right ahead. The protocol is not going to block you or refund you like it does today. So if you go ahead right now and try to add liquidity to THORChain, it will immediately refund you and try and block you from doing that. It doesn't do that for trade assets, but it will do that right now for secured assets. I think we need to get rid of that TVL check, and the reason why is because every asset that the protocol is minting is a working asset. Pool liquidity works in the pools and makes money. Trade assets are high velocity assets used by ARBs to rebalance. And if you look at a dollar, like trade assets on THORChain are extremely hardworking assets. $1 in trade assets is doing like $10 more notional velocity a day, which is wild. So they make a lot of money for THORChain. And I think this perspective should carry over to secured assets, where every dollar in secured assets is achieving high velocities because they are not destined to be wrapped and minted out on IBC or pushed out onto Ethereum or whatever, and let some other protocol capture velocity fees in those. Rather, those secured assets are working in lending in the app layer, whether they're on the perps exchange synthetically, whether in the order books ready to be dropped in as a limit order, or whether they're wrapped up in a lending protocol and making fees. Either way, you don't come to Ruji app layer or the THORChain's app layer to mint a bit, 100 grand of secured assets and not do anything with it. You're going to deploy that in an app, and it's going to make money. Therefore, all of THORChain's assets are going to be cash flow yielding assets, driving value back to its security, or cash flows back to its security. This is the term optimistic security. And if you look at it, like 100 million in total asset value, generating 10% yield for as income is about the risk-free rate, or THORChain's risk-free rate right now ish. And so if we let the TVL trade secured and liquidity grow up, and we hit to 200 million, or half a billion, or even a billion, we are going to see that continued usage and that velocity and that cash flow. And all those cash flows are going back to the base layer and the node operators. So those node operators are not going to sit there and chill out at 30% APR after years of stability. That 30% APR has to get diluted back down to the THORChain risk-free rate. And so that will cause security to increase. So that's my positioning there. And it's does that make sense?
I guess it does. I'm still a bit wary about this, in that there's your views, the increase in Rune and the buy pressure in Rune is just going to come from market demand for that yield, whereas in the past when a system namely savers and lenders was built based on sort of demand, which was meant to impact the price of Rune, it didn't turn out well, and I guess I'm just a bit cautious.
Well, let's ask Kenton right now. Like, Kenton, if over the next 2, 3, 4 years, if the THORChain risk-free rate goes up to 30% APR and doesn't look like it's dropping, what are you going to do? That's literally a question, Kenton. What are you going to do?
Why do we have to do anything? What's wrong with that?
Are you going to bond more? Are you going to buy more? Or are you going to just ride out the 30%?
Well, if I have
What's your
capital, I'll
behavior?
probably buy more. But I don't see why that's a problem. Like, you make it sound
well, there you go. You're going to buy more Rune. So, I mean, that's the case for everything. It's if the yields are going up and the risk is going down, the more people participate. So it's not a case of let's shut down security. It's a case of no, let's just take on as much TVL as possible. Let's take on as much working capital as possible, because Thornode, like Rune bonded, is not working capital. It's like a securing capital. The only capital that makes money in THORChain are trade assets, pooled assets, and soon secured assets. And if people are showing up to your pub, let's say you run a pub, and people are like streaming at the door, and there's like more people outside your pub than inside it, are you going to keep turning away, or overnight are you going to bring your board in and say, how can we open a beer garden? How can we expand onto the street? How can we?
But the reason people are coming into the
patrons
pub is because they feel safe there. They're not going to get killed. It's a fun environment. The reason people are coming to THORChain is they feel safe because they're not going to get their crypto stolen. That's what's providing that activity is the security. I mean, look at the term secured assets. We came up with that. The whole point of that word was that it wasn't a wrapped token without any security.
Optimistically secured assets.
Oh, now you're changing it. That's THORChain's entire value proposition is that it's economically secure, which is a very powerful meme. Even with normies, like, people hear that, like, wow, that's pretty cool. Like, I tell somebody, imagine FTX, imagine Sam Bankman-Fried had to put up 10 or 20 billion bond to hold the 10 billion of his customer assets, he never would have stolen it. And people understand that instantly. Like,
So
and the light bulb goes up and they're like, wow, this is pretty cool.
so can just two comments, because like I think we're gonna be having a debate on this tomorrow, so I think we can
Yeah.
leave that then. But just a comment to be more precise is that nodes are still incentivized to over collateralized in this model. If you make optimistic security, that what changes is, do you limit when it's not? That's the question. But the incentive pendulum and everything is still there, pulling nodes to bond more when the system is insecure. You're not changing that. What you're saying is when the network is down or underbonded, which arguably is the state at which you want economic activity to thrive. Instead of thwarting it with a cap artificially, you let it play out to bring economic activity back up, and that will eventually bring bonds back up as well. So the incentive is still there. It's just the cap is at what's
Yeah,
removed.
100%. It's
So
yeah, it 100%. All that changes is, do you have a cap? Do you stop the patrons entering your pub, or do you make room for them in your beer garden? And at the end of the day, is, do you trust 2/3 of the node operators to not take all the money? That true today, true tomorrow, true with optimistic security. So it comes down to the node operators and the governance of the protocol.
Let's talk about it tomorrow.
I won't be there tomorrow, so let me just add a little bit of color and to this, because I have some thoughts on this. So I think I'm in soft agreement with JP. I think JP is basically right on this, where we are already in. So the concept of economic security was created to basically pigeonhole everything into, all right, everything is secured in the pools. And as soon as we moved into bond providers and also secured assets with or trade assets, we already moved past that model. And you can think about it like right now, if the rune price like tripled at this very instant, is the network 3 times more secure than it is right now? And the answer is it's not really, because it really depends on the operators of those nodes. That the price is a function of liquidity, and just saying that the network is like underbonded right now versus like if the rune price 3x's at this very moment, like the real thing you're trying to protect against is a Sybil attack, someone coming in and buying up a bunch of rune, or even worse, getting bond providers to come in and provide the bond for them to come in and steal funds from one of the threshold vaults. I think that the only scenario, the attack scenario, that is possible really would be someone coming in and buying up a bunch of rune. And I think it would be pretty obvious if someone's buying up 20 million rune to try and buy up enough rune to try and get the keys to one of the vaults, obviously, because the price would go absolutely insane trying to buy 20 million rune off the open market. So I think that my proposal for the best solution forward, so not completely just removing the caps. I think we should just add some kind of multiplier to the economic security of the network, something pretty liberal but not completely unbounded, where like there still will be a bound at some point, because I think functionally it does the same thing, but adding some kind of multiplier, say like add 50% to the security budget, will go some way in saying, yes, at this point we will allow us to secure extra space under the same custodians of the funds, of the same node operators. But in order to increase it in the future, there have to be another governance vote. So I think just something like a federal like debt increase, where obviously this wouldn't be like as often, but if we ever do get to the limit, we have to consciously make the decision to go above it rather than to kind of just let it grow unbounded. So those are just my thoughts on kind of how we've already moved past it. And one other point to bring up here is that THORChain is very capital inefficient in this way. And it was designed with the economic security as a premise, which is great from the security point of view, but doesn't really make sense when you think about the liquidity of Rune itself. If you tried to sell all the Rune right now, it's not actually worth however many dollars you say it's worth at the current market price. So yeah, I think we're already living in that world. We just need to kind of move into it, but keep some kind of upper bound to keep it from getting too out of whack. Like you don't want, 1 billion securing like $1 trillion, right? So there needs to be some kind of upper bound. But yeah, we're already in that world that you guys are speaking of. We just kind of need to move into there, is my opinion on it.
Just quickly on that, you know how Maya has liquidity nodes and things like that. Is it feasible that secured assets could be bonded to nodes in a similar way?
I mean, anything's feasible. It's just whether or not we want to go down that rabbit hole. For now, there's so many moving parts on the table. I think for the next at least 3 months, it's just going to be scheduling, and we can entertain some of these more crazy ideas later.
Yeah, it's even worse than doing Rune as bond, because then you're both having to secure the asset and saying it secures the other assets. So like,
Correct.
to me, it makes even less sense than than what we currently do.
Fair.
Like you might as well just raise the limit. Like there's no reason to not just raise the limit and say like, yeah, we're still as secure, even though we can. Let's say we can just up the cap by 40% right now.
Yeah, bonding secured assets doesn't really improve the security assumptions in any way. And finally, last thing I'd like to say is that there's also just a large set of all-time operators that are kind of known, trusted in a sense, and you need an overwhelming amount of dishonest operators to steal funds from the vaults. You need 2/3 dishonest operators to steal assets. So yeah, it's
This is the thing, though.
it's also a
People
losing battle.
can appear to be honest today and turn dishonest tomorrow when there's $1 billion on the table. We don't even need a new the validator set to turn over. It's incentives, right?
But again, the incentive to bond more, Kenton, is still there. It's just when the opposite is true. Like, and if we're talking about billions of dollars, the cap we would probably be safe then. The cap really, when it's become an issue, the 3 times it's become an issue since THORChain's history, is during economic downturns. The problem is not that there's too many assets to secure, is that there's too few, and that Rune's price is harmed because of the low economic activity. So doing the cap is the opposite you want to be doing. Typically, in the opposite scenario, we have sufficient or excess security, if you just see it anecdotally. So anyway, we'll discuss tomorrow.
Yeah.
Yeah, with that, do we want to wrap it up, guys? I think we'll have a good discussion on this more tomorrow. I want to thank everybody for coming out and really appreciate the conversation around where we're at, where we're headed, and some other considerations. So yeah, just excited and super bullish in terms of the opportunities ahead. And devs are head down, getting everything put together, and we march on.
Thanks, guys. Chat tomorrow.
Thanks, guys.
See you then.
Yeah.
Bye.
All right, guys. See ya. Bye-bye.
See you.